We had another negative month for US stock indices, and later today we're going to hear from the US Federal Reserve with its latest rate announcement. Want to know more? Keep watching. Hello, I'm David and this is Trading Today. Yesterday we finished the month of October with some positive moves from the major US indices, but nothing like enough to stave off the losses that happened overall. The Dow for the month down 1.4%, the S&P down 2.2%, the Nasdaq down 2.8%. Now, a lot of this is down to bond yields. If we look at the US 10-year Treasury, that hit a 16-year high of 5% last month, and it has pulled back a little bit, down to about 4.87 this morning. All eyes were on the Treasury first thing because the US Treasury announced what its program of Treasury sales were going to look like going forward, and they met market expectations and bond yields did soften a touch. Now, we've had a lot of corporate earnings out today. In particular, we've had some ones from the UK. We heard from Next, the retailer, another great bunch of results from Next. It's really outstripping a lot of its competitors in this market. The shares were up 4% as the company released better than expected forward guidance for the rest of the year. GSK, formerly GlaxoSmithKline, also positive forward guidance, but the shares were little moved. Aston Martin had a shocker. It didn't manage to narrow the expected loss, and also it warned on sales volumes. The stock was down 14% at one stage. And ASOS, another big retailer, also produced some pretty dismal earnings. Now, we've also heard from a few US companies. Just to run through those briefly: AMD, Yum, Estee Lauder, all disappointing, although we did have some positive news from CVS Health. Now, the big thing today, of course, is going to be the US. Oh no, before I go on to that, just one thing. We also had the latest ADP data on the non-farm employment change. This is a precursor to Friday's big official non-farm payroll report. Now, we did see an unexpectedly, we saw a bit of a disappointment from that figure, which of course conversely and perversely, as we know, is usually quite good for the markets, and so it has proved to be. We saw a rise of 113,000 payrolls for last month, expected to come in at around 148,000, so disappointing. But of course that shows that maybe the Fed's tightening is doing its work, and therefore in the market's perception is that maybe they won't need to rush in to do any more tightening. Now, tonight's FOMC rate announcement, no expectation of any rate hike tonight. However, investors will be looking at this adjoining statement and also the subsequent press conference for Jerome Powell to see if there are any clues about what the Federal Reserve intends for the rest of the year and beyond, because markets are pricing in about a 20% chance of another 25 basis points rate hike in December, at the December meeting. Now, of course, a lot of FOMC members are saying that they think that the rise that we've seen in bond yields is actually doing all their hard work for them. But if you look at a lot of the data, bear in mind inflation is still well above the Fed's target. We had a stellar GDP report earlier, last week, showing real economic strength, and it just feels like the Federal Reserve should carry on tightening given the strength of the economy. The only thing perhaps that is suggesting they may not want to do that is because tightening further really does raise recession fears, but that's how we stand at the moment. Just one thing, please remember, we've had the clocks go back over here. They haven't in the US, so we'll have the FOMC statement and announcement at 6 p.m. GMT with Jerome Powell speaking at 6:30. Thank you very much for watching. I hope you found this of interest. If you did, please like and follow, and best of luck with your trading. Goodbye.